You're watching Captains of Industry here on CNBC Africa, and I'm speaking to Mike Brown, the CEO of Nedbank. Mike, always a pleasure having you in the hot seat.
Thanks.
How has Nedbank changed over the last 3 years with you at the helm?
If I go back over the last 3 years, I think I look back with a lot of pride as to what we've been able to achieve. We've put in place, I think, an outstanding executive team who are working well together. And off the back of that, we've been able to deliver, I think, to our clients and customer base. We've been able to expand our footprint. We've probably grown branches by about 30% and ATMs by over 50% in that period. And at the same time, if we look more recently in terms of delivering to shareholders, we are either the number one or number two performing banking stock over 1, 3 or 5 years.
Looking back at Tom Boardman, are you still vision-led, values-driven organization? Tom used to drum that message home.
Yeah, absolutely. I think the essence of building a business to be sustainable and successful over time is to be vision-led and values-driven. And without doubt, we've probably spent more time, effort, energy, and money on building the corporate culture within Nedbank, which we believe is our only sustainable competitive advantage over time.
While we're on vision, do you still strive to be the most admired bank?
Yeah, so our vision changed slightly when I took over. We used to focus more on Southern Africa. We've now said we want to build Africa's most admired bank by 5 different stakeholder groupings. Firstly, our staff, because unless you're most admired by your staff, you can't deliver to the second stakeholder grouping, which is your customers. And unless you're delivering to your customers, you can't deliver to shareholders, which is the third stakeholder grouping. And clearly, given our industry, it's also important to deliver to regulators and communities.
To be the most admired bank in Africa, you obviously are looking at rolling out an aggressive Africa strategy. That does include EcoBank. Are you going to continue to JV across the continent, or will you go it alone in some territories?
Look, I think the easiest way to explain our strategy in the rest of Africa is we have an alliance or partnership strategy in respect of Central and West Africa. And that's where EcoBank is present in 32 countries, and they really have been a fantastic alliance partner. It's worked well for both of us. And more recently, we've been able to cement that alliance with the possibility of taking a 20% equity stake in EcoBank in about a year's time. So I think that is absolutely the right strategy for Central and West Africa. If one looks closer to home, Southern Africa, the SADC environment, and into East Africa, that's where you'll see Nedbank building out our own presence. So we currently have businesses in Swaziland, Lesotho, Namibia, Zimbabwe, and Malawi, and we would certainly look to acquire in that southern and eastern geography to the extent we found something was sensible.
So you've basically got an organic growth strategy for East Africa versus a partnership JV type strategy in West and Central Africa.
I think that's exactly right.
Can you compare them yet in terms of the traction that they're both achieving? Which one is more successful, in other words?
I think we think that it's the combined footprint that strategy gives you that will be differentiating and more successful. And we think that they're both the appropriate strategies for those geographies.
Is it the retail space that you're driving hard across the African continent?
No, so it's certainly wholesale and retail. In fact, in the initial stages of many of these businesses, they're driven more on the wholesale side of the business, because what you see taking place is more and more South African companies looking for the growth story in the rest of Africa, and us following our clients in that trajectory.
There's a lot of talk at the moment about the South African consumer and the health of the South African consumer, given the fact that we are at record low interest rates in this territory. Do you think that we are sitting on a time bomb, that as soon as we see that interest rate cycle turn, the consumer is going to come under enormous pressure?
So I don't think we're sitting on a time bomb. Generally what you've actually seen is consumers getting above inflation increases over the last few years. Overall household debt to GDP is sitting just around 75%. It's come down from above 80. Now, the last data point, it ticked up a little bit, but it's certainly not at the levels that it was before. And in fact, a large proportion of consumer debt, particularly in the unsecured or personal lending market, which has been a big focus, is in fact fixed rate debt. So those consumers are much more susceptible to increases in food prices or fuel prices than interest rates.
You don't believe that there's a bubble in the unsecured lending space?
Certainly the way we've always expressed it is I think that there's a lot of froth. And if you look at some of the providers into that space who've come with larger unsecured lending products for longer dated durations, payment holidays, all of those sorts of things are, in my mind, the signal of froth. I don't think that there's a bubble that's about to cause the industry massive industry-wide pain, but I'm certain there are some providers in that industry who are going to take some strain over the longer term.
Nedbank has achieved a stable footing in the South African landscape. In fact, it's now seen as a success story among the big four. Do you think that the bancassurance model is starting to work for you?
Yeah, so certainly the bancassurance model has worked extremely well for us. We did a transaction about in 2009 where at that stage we didn't own 100% of our insurance businesses. We did before 2003, but in 2003 we sold 50% of our insurance businesses to Old Mutual, and we sold 50% of our high net worth businesses, then branded BOE Private Clients, to Old Mutual. In 2009, collectively ourselves and Old Mutual, I think, realized that under a single ownership structure, 100% owned by the bank, we'd be able to grow those businesses faster. We paid Old Mutual with shares, so they've effectively benefited through the overall pie growing in the Nedbank share price. But since we took control of those businesses within Nedbank, integrated them more tightly with our retail offerings, if you look into our results, we're arguably the fastest growing bancassurance business now in South Africa over the last few years.
Perhaps just taking a step back on bancassurance. In lay terms, how would you explain the model for somebody who wants to understand how it operates? Because I would assume that it is about mining one another's databases. That's effectively the bottom line. Is that right?
So I don't think it's about data mining, etc. Clearly that's a piece of it. I think the real piece is to be able to offer your customers appropriate products in the most simple way. So the way that we think about it is in the high net worth environment, clients want what's called open architecture. So you need to have to offer them a choice of products across various service providers. And effectively the bank becomes a commission earner on those products, but not necessarily the product manufacturer or factory. If you then look into the more simple products, for example, things like homeowners insurance, credit life, funeral cover, those you would want to get embedded much more tightly into your retail sales processes. You still offer customers choice, but generally the products are more commoditized. And in that environment, we would want to both be the product seller as well as the manufacturer of those products.
What is your biggest challenge on a day-to-day basis, Mike?
I think right now, the biggest challenge for many people in business is the macroeconomic uncertainty and volatility. And, that's not peculiar just to our economy. You only have to read the newspapers to know the enormous challenges around that Europe has in terms of its competitiveness and growth, the challenges in China around switching from an export-led economy to a consumer-led economy.
So you're concerned about the knock-on effect that the global picture has on South Africa? And
the upcoming fiscal cliff in the US. All of that has a knock-on effect in a small open economy like ours, and I think that's a really difficult challenge. Particular to banking, we also have an avalanche of regulation coming in our direction, so we have to try and marry both of those challenges.
Let's talk about the regulation. Is there anything on the horizon that is going to be, in your opinion, unwieldy in terms of navigating the regulatory landscape?
Yeah. I think the South African banking industry is in really great shape to navigate regulatory landscape. If you think about Basel III, which is the sort of big regulatory issue coming, it's got two big elements to it. It's got a capital element and a liquidity element. The capital element we're all in great shape for. Most banks here have around 11% core tier 1 capital on a Basel III methodology, which is absolutely fantastic. The liquidity environment has two pieces to it. Liquidity coverage ratios, we're also in good shape now that we have a committed facility from the central bank. The real issue that I don't think anybody can deal with globally is something called net stable funding ratios, and I expect those to change dramatically between now and 2018.
What key metrics do you look at on a regular basis in terms of ascertaining the health of the bank?
The difficulty in running a bank is I don't think you can ever say what are the most important two. You have to look at a suite of metrics and get a reading from those. So clearly what's a very important read for us is the health of our staff. So we measure culture and values in terms of the Barrett methodology, and we watch our cultural entropy, which has fallen from above 20% down to 10%, which is a world-class level, a really key measure. We do lots of staff surveys, and those are also in good shape. So staff surveys, very important measure.
So people are your best asset?
Without doubt. The second key measure for us is the health of our customer base. So again, we measure something called Net Promoter Scores right across our customer base, and those are in good shape right now as well. And it's only if those two are in good shape can you then look at your financial metrics to understand if they are sustainably in good shape. And if you look at financial metrics in the banking environment, I think, if you wanted the kind of two most important ones, it would probably be return on equity and return on assets.
What about the competitive landscape? We've seen a perhaps aggressive campaign being launched by FNB. They certainly appear to be getting a lot of traction in the retail space. Have you reacted to that competitive onslaught, or is it not affecting your customer base, the base that you refer to?
Yeah, I think the way we think about it internally is, what we want to do is watch what our competitors are doing, but we're really focused on trying to provide the right services and products to our customer base. And it's quite interesting, we've been able to grow our customer base by about 12%. We haven't seen any loss in customers in our customer base as a result of the very aggressive FNB strategy. And we're much more focused on trying to make sure that we deliver products to our customers that do what we say they're going to do, and not really focus on what our competitor strategies are.
Are you innovating in the tech space in terms of product delivery to your clients?
We've had some fantastic innovation in the tech space in the last couple of months. Arguably, we were a bit slower than some of our competitors, but we've taken the view that what we've tried to do is build superior infrastructure and security, because what that means is that we will be able to be more sustainable in our innovation over time. So rather coming with quick wins, we've built effectively in the mobile space a secure digital highway that's now enabled us to release our Nedbank apps. We've released apps in the Apple environment, the BlackBerry environment, and the Android environment, and coming soon for all other smartphones. So basically what we've tried to do is build an infrastructure that will enable us to reach more smartphones than anybody else and to sustainably launch innovation across that infrastructure.